Hey everybody, so we decided to do our analysis of financial statement about the Boston Beer Company, which is one of the largest craft beer companies in United States. So about the content of this presentation, first we're going to talk about the preliminary research, then about horizontal and vertical analysis, ratios of course, and lastly we're going to conclude the whole presentation. So general information about the company. It is one of the largest craft beer brewers in United States, and they sell beer under the brand name Samuel Adams. And Samuel Adams is a very domestic US brand, which is very unknown, especially in Europe. But however, they have still expanded their markets in Canada, Europe, Israel, Australia, New Zealand, Caribbean, Mexico, and South Africa. But it is very unknown brand, and their main business goal is to become better beer company and offer higher quality alcoholic beverage all over the world. So as a reference, we use their annual report from 2017, and to compare the financial data, we also use 2016 annual report. And both of them were found from Boston Beer Company's official website. And the reason why we chose this company for the analysis, it is because of the interest of knowing the financial situation of a smaller craft beer company, which is very unknown to both of us. And of course, because it is the US craft beer markets, which is very different compared to European. And as I already said, the whole brand is very unknown to Europeans. And about the preliminary research, when we check the financial data, first we can see that the net revenue was a lot smaller compared to 2016 net revenue. It decreased 43.4 million. And if you look really quickly, it is easy to see that the 2016 was more profitable than 2017, and this has been because of the many reasons. We will tell more about the reasons later on this presentation. And for example, the net revenue per barrel increased by 1.6%, and there was lower brewery processing cost, and they lowered the volume on unfavorable products, but we will tell more about that later.
So if we continue with the horizontal and vertical analysis, this report part, we can see the results are a bit tricky for understanding, but for instance, taking into account that the net income for 2017 was bigger than it was in 2016, many factors in the income statement suggest to us that altogether 2017 was a bit tougher than 2016, because in the old numbers we can see quite many differences. But anyway, reducing producing cost allowed to Boston Beer Company to end it up with the bigger net income compared to 2016 statistics. So the percentage change between the years was only 13.4%. So in this case, we can continue with the ratio analysis. So we use key ratios to measure Boston Beer Company's profitability, efficiency, liquidity, and capital structure. In the table that you can see, shows all the necessary information and calculation and how valid the ratios are. So to start with, the company profitability, gross margin was 52.1% for the year ended in 2017, as compared to 50.7% for the 2016, which clearly shows that the reduce in the production cost. But when it goes to the earnings before interest and taxes, operating profit, the percentage is lower compared to the 2016. The profitability ratios measure companies' ability to run the business, and for the increasing in selling prices has obviously caused the increase also in gross margin percent. When it comes to efficiency, debtor days tells us the average days that take to collect sales receivable, and according to our calculation, the days are 14 during the both years. So it means that the creditor days, however, tell us the number of days and it takes to pay on account payables 31 in 2017 and 32 in 2016. So they have relatively stayed at the same level, but according to this, it takes a month for the Boston Beer to pay all accounts that they have to pay. It's quite much.
Yeah, that is quite relatively though.
Yeah.
A month, yeah.
And if we talk about current and quick ratios, and they both part of liquidity ratios that measure how quickly assets can be converted into the cash. And according to calculations, current ratio managed to stay under 2 at the both years, which makes the ratio fair. And like current ratio measures company possibility to pay back its current liabilities with its current assets. So at the moment, Boston Beer Company can pay back bills on time. That's really good. The same goes with the quick ratio, which is asset test. Asset test tells companies' ability to meet the short-term loans with most liquid assets that can, if needed, be converted into cash right away, but only if necessary, of course. As ratio is good at both years, like 1.2 in 2017 and 1.4 in 2016, asset test explains that Boston Beer Company liquidity ratios are in good shape. But on the way, quick ratio was better at 2016, even the number is not relatively changes, and that therefore still states that the company is using its asset optimally, which can be very big factor for the future investors. And it's very clear that okay, so we will continue with the capital structure. And the capital structure tells that the share of equity and liabilities, and for example, is the company able to pay back its long-term debts? Long-term loans are always more riskier compared to the short-term loans. For as investing money to something, taking a loan is a big risk. And the Boston Beer Company debt equity ratio was 0.33 at 2017 and 0.38 at 2016. So this ratio tells that the company can easily pay back its long-term loans as well, and the company also has financial leverage. When it comes to equity ratio, both years' percentages are good, even though debt equity ratio is more common in USA. Relatively indebtedness is also good at both years. All capital structure ratios states that that Boston Beer Company is financially in a good shape and good, for example, for the future investment.
So then we're gonna talk a little bit about the financial changes, what caused those changes. And here we have the income statement there, like the net sales and operating profit and net profit laid out, just for reference, for example. So the reasons why there was financial changes was the lower brewery processing cost and the reductions in waste. Then they also lowered the volumes of unfavorable products in the product mix and altogether reduced the operating expenses of the products. And they also changes the packaging. Yeah, packaging, and they changed from kegs to bottles, which, however, instead of decreasing, increased the product price, which therefore reduced the sales.
And also like they increased the wages for the employees. So it means that like employees
Wages, yeah. They increased the wages for the employees, so they budgeted more money to the administrational costs.
Yeah.
So as we also already mentioned in some part that there was a drop in net sales, and this was due to the increased prices, which therefore decreased shipments. And yeah.
And one of the main, I guess, changing was the new CEO. So like in 2016, they had another CEO, and in some reason he's left. And after like new coming CEO, the situation, the whole company also can be changed because new ideas, new rules, and other
New
stuff.
leadership, yeah.
Yeah, so it's also may affect the whole situation in the company. And one of the main but not least thing, it's like political and economic situation in US. As we all know, like the whole situation that happens in US is quite difficult, and
Yeah, there was a new president that started, and of course it changes the political and economic point of view from many companies, which therefore I think that might have been a reason why the whole company was taking a rather low profile without taking any huge financial risks, because of course the whole economics and political status, it affects the whole thing.
yeah, to the whole country.
Whole country, yeah, exactly. So to conclude, the highlights of 2017 included the new leadership and CEO, as we already mentioned.
Yeah, and like company managed to reduce a lot of from producing cost and using less expensive ingredients and new packaging methods, which also leads to the increase in barrel prices.
And they also reduced the unfavorable products from their product mix, which therefore gives some room for evolving in the future, because in the craft beer markets it is really important to keep up with the competition, because there's a lot of competition. And also we didn't focus much on shares, but the shares increased at 2000 as well.
So firstly it was $948 million and increased 100,
yeah.
and it increased into 965, so almost like
1000,
yeah, it's almost like 962
Yeah.
66,000.
Yeah, and as we have already mentioned many times, sales were not as good as they had been in 2016. And so, to conclude the whole presentation, we think that compared to 2016, 2017 was financially less riskier year. It was profitable, but still less riskier.
Yeah. So thank you for your attention. We hope you like it. So thank you.